Hey, happy Friday, everybody. Time for Condors, Calendars, and Butterflies. My name is Brent Moores. We do this each week. And today I want to talk in particular about finding options trades. How do you find them? There's different ways, different approaches. I'm going to tell you kind of the ways I usually do it, but it's not one size fits all. So I'm going to try and give you a couple different choices here, and you can decide for yourself. We're going to get into that in a minute, but before I do so, let me just mention thank you for joining me. And whether you're watching on a recording or live, we appreciate your viewership. Also, I'm joined by James Boyd in the chat. Appreciate James. Make sure you check out his Investing Masters series as well. That's on Tuesdays, excuse me. That's on Tuesdays. And you can follow James or myself on X at Brent Moores CS, at James Boyd CS. Let me go through a few of the disclosures here before we get too far into this. Options do carry a high level of risk, and they're not suitable for all investors. And the material today is intended for general informational purposes only, and they're not recommendations. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Paper money software application is provided for educational purposes only. Rolling strategies can entail additional transaction costs, including multiple transaction fees. And all investing involves risks, including the potential loss of principal. There's no guarantee that execution of a stop order will be at or near the stop price. And all the symbols, names, market data, and images used are for illustrative purposes only. Schwab does not recommend the use of technical analysis as the sole means of investment research. Past performance is no guarantee of future results. There we go. Let's head on over to the Thinkorswim platform. I appreciate you all joining me. And in the chat, Alan got here early. Appreciate you, Alan. Mentioned something. He mentioned that, hey, some stocks are going to have more expirations coming forward, going forward. And just the most traded, most liquid stocks, Tesla, NVIDIA, Apple, Amazon, Meta, Alphabet, Microsoft, Broadcom, and then there's an ETF in there as well that you can, that's going to come up. They're going to have extra expirations. Okay, so they'll have 3 expirations per week. How does that affect things? Well, we're not going to shy away from those when those come about. And because just like every week, we look at different options and we look at different expirations, and they're all possibilities. And really, it doesn't matter when something expires. What matters is, are they liquid? And does that expiration fit in with what we're looking for? Let me give you an example here. This is S&P 500. So this is an index. We're not going to trade this today right now, but if you look at expirations on the S&P 500, look, there's expirations like pretty much every day on the S&P 500. Now, this is very heavily traded, very liquid, and so it can support more expirations. If the options weren't liquid, if the stock wasn't liquid enough, if it didn't have enough trading interest in it, if you put out more expirations, it would just spread out the options trading activity even more, and each individual contract would be even less liquid. So that's why they limit it to those more liquid expirations. So you can look forward to that in the future. Now, right now, if I go and I just pull up Google, I don't think they're listed yet, are they? We'll pull this up, and well, here we go. Okay, so look at your weekly expirations. They are listed right now on this. So more expirations available. We're still going to judge them with the liquidity requirements that we have otherwise. But if I trade a weekly option or I trade a monthly option, it doesn't really matter. The rules are the same. What matters is the expiration date. So just be aware of that. In the future, we likely will look to trade some of these, but not today. I'm not planning on doing that today, but I just wanted to mention it because Alan asked a great question. So I appreciate you, Alan. Now, here's what I'm going to do. I'm going to pull up Apple here. Apple just had earnings. Some of you may have seen it. And I'm going to pull up Apple. And I'm going to look for a trade on Apple just to start us off here. And I'm going to go with the trend here on this. It's trending down, seem to be bouncing off the 20-day moving average. I'm going to consider this to be kind of bearish, maybe slightly neutral, slightly bearish here at this point. We're past earnings. We don't have to worry about that. And so let's look. I just want to throw on a trade that's going to be positive theta, hopefully, and slightly bearish. So let's do a butterfly spread. Okay, this is a condors, calendars, and butterflies class. Let's look at a butterfly spread on this. So what I'm going to do here is I'm going to go to the trade tab. I'm going to look at Apple. And I'm just going to go out and I'll just go out to the monthly options here for a sec. Okay. Now we can do weekly options. And with Apple, you probably have pretty good liquidity on the weekly options. That's one of the things I want to point out today is really the liquidity matters. If you look at these weekly options, look at the bid ask spread. Nice type 5, 10 cents, something like that. And that's good. Okay. That's great. And monthly options the same. Some stocks will be a bigger difference though. You look at weekly options, they tend to be less liquid. Okay, they tend to be less liquid. But Apple, we're not going to worry about this, but I'm just going to stick with my February 20th expiration here on this. Okay. Now, I'm kind of bearish on this. So what I'm going to do here is I'm going to actually put in a butterfly spread. So I'm just going to click here and click on butterfly, but I'm going to end up skewing it a little bit. But because I'm bearish, I'm going to put the middle strike. We get 3 strikes. I'm going to put that middle strike a little below where we're currently at. We're currently at a 257. I'm going to put it at 245. Now we'll tweak this in a little bit as we look at these. I'm just going to click on this, pull that up, and what I'm going to do is I'm going to just the default on this, it just puts it 1 strike wide, basically the next increment up. That's a really tight butterfly spread, right? If you're looking at a butterfly spread and the spreads are like, the risk reward is going to look kind of like this. Excuse the crude, my crude drawing here. It's not a very good drawing, but it's going to be really tiny. Okay. So we're going to spread out those strikes a little bit wider there. And so that's what I'm going to do. So I'm going to go up here and I'm going to just maybe make them 20 wide here. 265, and I could go to 245. I could go to 225, but I'm going to skew this a little bit. I'm going to go to 235 here. Let me just get rid of this and let me analyze this trade. And go to, there's our risk profile. Okay, that's what it looks like right now. Okay. Actually, let me just make sure this is unlocked so that we get a decent price there. Okay. So this is what it looks like. Where's the current stock price? The current stock price is right here. Okay. Right at basically where our break even is. And like we said, we're kind of bearish on this. It does well if it goes down a little bit, peaks out about the 245 level. Let's look at the chart. So it peaks out, this would be kind of our max profit down in this area. So we're matching up the chart with the trade, okay? If it goes down further than the 245, it's okay. Profit's not going to be as much probably. But if it goes way down, we're still in a profitable situation according to this risk reward graph. Okay. What if it goes against us? What if it goes up? Well, there's the risk there. Of course, there's the risk. That's why we're bearish on this. If we felt now, what I may do is I may say, well, look, this looks kind of like a resistance level. We bounced here. We just bounced here. This is just a little bit above that 20-day moving average. If we break above that, maybe 265 or something like that, maybe we're going to get out of that trade. So there's a potential trade for us. Now, someone said, can we look at the ex-dividend day? This is the ex-dividend day right here. You ever see these little green circles on the graph? That's the ex-dividend date. Don't confuse that with the earnings date. Okay. Do I care about this? Not that much for this options trade. Look, these are quarterly. They're going to be quarterly dividends, 26 cents. Everything else being equal, the Apple stock will drop by about 26 cents on that day. That's not that much compared to the price of Apple, to be honest. But there we go. So there's the trade. That's the trade we're looking at. Now, I can tweak this. If I want to make it more bearish or bullish, I can spread these out more. If you want more on butterfly spreads, hey, I've got a webcast. We did that in this webcast, condors, calendars, and butterflies. I went through a whole series of different types of trades. One of those is butterfly spreads. I just put a playlist for this webcast in the chat. So if you want to check that out, I don't remember exactly what week it was, but they're clearly labeled in that playlist there. Okay, so there's the trade. Make sure you're aware of, well, we kind of see where our break even is. You got to know that for your trade. What's your max gain? Okay, and your max loss. But don't just get too caught up on the reward to risk ratio as defined by the max gain and max loss, because this max gain is a single point. It's pretty unlikely it's going to hit right in here exactly, but it gives you some idea. So you got to look at the probabilities. But overall, this is a trade, roughly a 50-50 trade, because our break even is right about where we're at right here. So there we go. So if I want to send this, I can send this. And let me think if there's anything else I wanted on this. Oh, I was going to put an exit on this. We said if it breaks above 265, I'm going to look to get out. Okay. Now, you may be looking and going, did you pick that 265 because that's the upper strike? No, I didn't. I actually picked that 265 because that's where I felt there was kind of a clear break of resistance if we did that. But there you go. So I'm going to go to advanced order. I'm going to just change this to first trigger sequential order. I'm going to right click on this. I'm going to create an opposite order. So here's our entry order. Here's our exit order. And I'm going to say, I'm going to get out at market, good till canceled. I'm going to click on the gear. And I'm going to get out if Apple marks greater than or equal to 265. And I invite you all to, in your paper money account, not your real money, play around at home here on this and do that. Okay. Now, let me just make sure that's, it's defaults to the mid price. Unlikely we're going to get filled right at the mid price. But let me confirm and send. Make sure you read everything here. Make sure it makes sense to you. Oh, I don't have any groups right now, so I'm just going to send that. And we got that trade on there. Now, how did I find that trade is really what I want to get at here right now. How did I find that Apple trade? Well, here's what I did. I went to a watch list. Okay. Which watch list? Well, it's one I created. We'll look at it together here in a sec. But I just went to a liquid stocks watch list. In other words, these are just stocks that are more heavily traded stocks. And I started scrolling down. So let me do this. Let me go here and let me go to the watch list I did. We'll recreate it for you here in a minute, but just in case if you're interested, liquid stocks watch list. And I started scrolling down. Now, I didn't get very far, as you can tell, because we traded at Apple and we did Apple. Now, I could have gone down the list, but it's easy enough. You link the list to the chart, and then as you scroll down, hold on, what'd I do? Charts. And then as you scroll down, it's not linked. Okay. I'm not obeying my own counsel there. And then as I scroll down, it automatically brings up the chart and I can look bullish, bearish, neutral, bullish, bearish, neutral. Decide what you want on that and do that trade. So you don't need to do this list. There's other ways to narrow it down to more restrictive stock. You can do the S&P 500. Well, S&P 500, you know, you're going to find a lot of pretty illiquid stocks on the S&P 500 in terms of at least their options trading activity. Okay. And so maybe you narrow it down. S&P 100, I actually do that quite a bit. I look at S&P 100 quite a bit. Okay. Dow, well, you can do Dow, but you're kind of limiting it quite a bit there. Maybe there's some happy medium, and that's what I did. Here's the thing. You can create a watch list. You can just type in the stocks, create a new watch list, or you can go to your scan and create a scan and save it. And once you save the scan, it becomes a watch list. In other words, let's do that. We're on the scan tab. I'm going to go here. Let me just remove everything. And so, well, this actually, I'm not going to totally clear it out. Okay. If you go to scan in, you can choose, go on personal. Okay. And you can go to S&P 500. Okay. That's what I actually have on there. Also, you can go to, I said personal, I meant public. Go to public, penny increment options. That means the option prices can change in pennies. Okay. So instead of just all the option prices being 555, 560, 565, 570, it could actually go to 556 or 558 or that. Those tend to be more liquid. This is narrowing down the list right now. Now I have a few other things in here, and you can just add the filter. I'll share this scan with you here in just a minute. But I can just put in minimum, and I'm going to just put a minimum stock price, and I'll just do, like we just do mark here of 20. Okay, 20. I don't care how high it goes. It can be, but I don't want penny stocks, or I don't want a $5 stock in here for my options typically. So I put a minimum there of 20. And then there's one other parameter I'm going to do. And these parameters, these study parameters I'm about to add will not work in paper money. So just be aware of that. I'm going to go to volume, and I'm going to go to average volume, and I'm going to say greater than, let's see, that's, I count my zeros. That's 1 million. I'm going to make that 10 million actually. Okay. And let me scan. We got 53 stocks here. Okay. Now, if you're doing this, you can, let's say you were going along at home, you can then save the scan query, name it whatever you want. I just named this liquid stocks. Now that doesn't guarantee every stock in here is liquid or all the options in there are liquid, but that's just what I named it. But if you want, I'm going to share that with you. Okay. And I just put that scan in the chat. Okay. If you're watching on a recording, it's in the description. I put it in the description as well for this webcast. So you can do that. And so here's my point. The probably the most common way I look for trades in this class, and I'm looking for bullish trades or bearish trades or whatever. I just go to this list or a similar list, and I just look at the chart. And I use technical analysis, and technical analysis isn't the sole means of investment research, but it's a pretty common way. It's the way we do it in this webcast very often. And so the direction of the stock, the trend, your technical analysis is going to be a big factor. Ivan says, hey, how do we pick a strategy? Well, look, the first thing is, and James answered in the chat, I appreciate you, James. This is the first step. the direction, forecasting the direction. And that's using technical analysis is what we're doing right now to do that. Okay. And then we can look at some other things. We can look at volatility, especially around earnings. Volatility can change very quickly, especially with single leg options. It's probably a bigger factor because if you're doing a long call, implied volatilities are very significant. A short put, implied volatilities are very significant. If I do a spread, they kind of become less significant because the legs of the option cancel out, not totally, but they minimize, they offset to a certain extent at least one another often. So there we go. So that's the first way I typically look for options trades. Now let's look for some other ways, okay? And this is kind of related, but I'm going to say you can run a scan. You can create a scan. Now, technically, you're saying, well, you just created a scan on long liquid stocks. But my point is, once you've created that scan, I don't even know when I first created this scan, this liquid stock scan. This was over a year ago. I created that. Then you never have to run the scan again. It's in liquid stock. It's in your watch list. It's in your personal watch list. Your saved scans, if I didn't make, at the risk of redundancy here, your saved scans come up in your personal watch list. And if there's the little purple targety symbol, whatever that is, next to them, that means they update. It's not a static watch list. Like I have one here, defense stocks. Those stocks that are in there never change. But this one up here, I can do this, bullish no earnings. Well, bullish no earnings. This is one that I created, and it updates as the conditions are met. So when you scan for stocks, you can create those conditions. Let's do this one, bullish no earnings. Let me just kind of clear this out here. I'm going to reset this. I'm going to actually remove my filters. And let me just kind of show you. And the purpose right now is to show you, you can create your own scans, everybody. Or I'll share it with you too in a minute here. Okay. But bullish no earnings. What I'm going to do here is look, I can go up here and I'm not going to go through all of them probably. Personal watch list, bullish, no earnings. Okay. Notice on this scan, I have one of my parameters, liquid stocks. Oh, look at that. Once you create a scan and save it, then you can use that scan as an embedded element in another scan. So, in other words, the very first parameter here is we're just going to be looking at those, I think it was 53 stocks that we had earlier that fit the bill for liquid stocks in this. Now, among those, then I'm going to look for other stuff. Else here, but I have some other stuff. And look, I have study filters. I've got 4 study filters. Again, to add them, you click on Add Study, Add Filter, okay, and then click on Study, and it will add it on down here. And then what I did was I did moving average scan. And sometimes you got to search around for them a little bit here. I think it's under popular studies, and add moving average scan. That's what I added, okay? And in fact, let me get rid of this one here. I added it twice. Let me just see if I can get a little more visibility. Add moving average scan, it populates it. And I just say the closing price is at least, and you can tweak these numbers to whatever you want, 1% above the 20-day moving average, simple moving average, okay? Do you want an exponential moving average? You can do it. Click on it, exponential moving average. You want a whole moving average? Use a whole moving average, whatever. This is just 1% above the 20-day moving average. Do you see why I may consider that for a bullish scan? If I'm looking for bullish stocks, after all, I named it bullish, no earnings, I want the stock above its 20-day moving average. That's pretty typical, okay? I also said I did that filter twice, moving average scan, the closing price is at least And I made this one 5% above the 50-day moving average. Okay. So we've had a little drop in a lot of stocks. And so a lot of those stocks aren't going to meet these parameters. We started with 53 stocks with the liquid stocks. Before we put in the liquid stocks, looking at all stocks, we had 10,000 stocks or something like that. And now we've narrowed it down a lot. Now, I also did a custom study. Okay, this is a little bit more complex, and I'll show you what I did here. Basically, what I wanted to do was I wanted a MACD histogram that was going up. What's a MACD histogram? Let me just pull that up. Do I have that? I don't have it saved here. So we're going to pull this up. And I'm just going to pull up MACD histogram. It's just an indicator you can use for momentum. And if I want the stock to be going up, I want these bars to either be, if they're red, I want them to be getting less, I want them to be sloping up. I want a positive slope, okay? I want it to be sloping up. Positive momentum, positive momentum, positive momentum, okay? This would be negative momentum. This would be negative momentum. But right now, I want positive momentum, okay? How do I add that to a scan? Well, I'll show you, okay? Again, I already have it here, but I'll show you just in case you want to do it yourself. I'm going to go to study, and it defaults to ADX. I'm going to make it a custom study. And let me bring this up. It brings up this window right here, and I'm going to edit this, and I'm going to change it. And what I want is, I want the study. The MACD histogram is a study. So I'm going to find that MACD histogram. You can do it somewhere in here, MACD histogram. Just going to click on that. MACD histogram is greater than what? What the MACD histogram was. So I'm going to find that study yesterday. So let me do that MACD histogram thing again. MACD histogram is right here. And I just want to offset that by a day. Okay? One day. So yesterday's MACD histogram. Okay? And I'm going to save that. And then I'm going to click on OK. And then we've just added. And that's what I had. That's what I already have, so I'm not going to have it twice, but there we go. Then finally, I added one more study. Again, filter, study. I don't want earnings. If you don't like this search, I don't care. That's fine. You don't have to. But if you like scans, there's probably going to be a time in the future when you decide, hey, I want to look for a stock that's having earnings, or I don't want a stock that's having earnings. Well, you can go to study, add it, go to corporate actions, go to earnings, and then it gives you the choice there, okay? So the default is study earnings. It has an earnings announcement, but I don't want it to have an earnings announcement. I'm trying to avoid earnings here. So I put does not have an earnings announcement anytime in the next 15 bars. Now that's not calendar days, that's 15 trading days. So that'd be 3 weeks or so, okay? And then I can run that scan, I can save the scan and tweak the scan to whatever you want, okay? Tweak it to whatever you want. And you know what's probably gonna happen? And this is from FibZone in the chat. That's common. Some people struggle with these. Don't expect that you're going to come up with the perfect scan immediately. Okay? It's like, let's say you have a kid and they're doing some artwork and they do artwork, or they're playing a sport. Are they going to shoot a free throw perfectly the first time or whatever, or have great form the first time, or draw that picture perfect? No, you got to tweak it. So you're going to come up and you go, well, these are the results, and I like some and I don't like others, and therefore I'm going to tweak it in a certain way. Okay. There we go. Okay. So here's our results on this. Oh, by the way, if you're interested, here's the scan. If you didn't follow along at home, here's the scan. If you're watching, I'll put it in the chat. And if you're watching on a recording, not live, you don't have access to the scan, access to the chat, I put it in the description as well. Okay. So there we go. And so then you can look at these and you can say, oh, here's Comcast, here's Meta, here's AT&T. And Meta, Meta just had earnings here. Let's look at Meta. Okay. All right, Meta. They had like great earnings. The market loved it. I'm going to call this kind of hopefully a support level here on Meta. And you can see momentum's still going up. We're past earnings. Well, we know it's past earnings. At least we know there's no earnings in the next 15 bars because that was part of the scan. We knew the MACD was going to go up. The MACD histogram was going to go up because we're past that there. So I'm going to assume this is going to continue. Now we may bail on this if it starts to break down on us, some, but that's fine. But let's do another trade here, okay? Let's do, this is a advanced options class, so I'm not just going to do a long call here or something like that. Let's do a diagonal spread here, okay? So why? Well, here's the thing. I am bullish on this, and I can skew the diagonal bullish or bearish. We'll do a call diagonal, which is going to be bullish. And then you can look for other things as well, okay? You can, now we just had earnings, so our implied volatility will have dropped and after earnings, and there may be a little volatile a little bit. Eventually, as we get closer towards the next earnings, we'd expect that implied volatility to go up. Okay, but there's a good chance it'll be a little while on that. So I'm not going to stress over that. But let's just look at the trade here. So here's what I'm going to do. I'm going to do a diagonal spread on Meta. Short leg. Okay, I'm going to go out roughly 20 days. Okay, well, we have an expiration right here, right around 20 days. Okay, here we go. And let me just address something in the chat here. JDLMI, I see you're answering there. Ricebird, thank you. No, the liquid stocks scan I just shared with you, just to be clear, is a scan I created. It's not in the public watch list. It's a private list. I don't think there's a public one that's named the same thing. So and I say liquid stocks, but keep in mind, the stock may be liquid, the option may not be liquid, okay? So on this list of those stocks that you're looking at, don't assume that all the options are liquid. You can look at things like open interest on these if you want. You can look at bid-ask spread. Always check bid-ask spread here, would be my take, okay? And I can look at these, and if I want, I can go here and go to open interest and look for your open interest as well there, okay? So let me go back here because I'm going to use delta to try and help us target a strike price. Delta tells us how much the option is going to move in relationship to a $1 move in the stock price, but it also gives us kind of an idea of how out of the money. We're going to go out of the money on this, and I'm going to go out to 30 to 35-ish delta. We'll go here, and I'm going to sell this one, okay? So I'm going to click on the bid price. Okay. This is a diagonal. We're going to look for a different expiration. I'm going to go out a couple weeks past that. Usually on calendars or diagonals, just in general, you may have noticed this with me, I usually separate them out more than 1 week. Okay, more than 1 week's time. You don't have to, but especially for these stocks, and I think Meta, am I incorrect? Is Meta on the list of, yeah, Meta's on this list of stocks that's going to have new, you got new expirations here, right? So you may have you may see these where you could actually do them 2 days apart here. Yeah, we're not going to do that here. Generally, I'm going a couple weeks apart on those. You can go longer, farther apart. On a diagonal spread or a calendar spread, if you go farther apart, they're going to be more expensive. Okay, they're going to be more expensive. I'm going to go to March 6th here. Okay, and on this one, I'm going to go in the money. Okay, just a little bit in the money. Go to the 715. Right there. And I'm going to buy this one. I'm going to hold down my control key. There's the trade. Let's take a look at it. I'm going to analyze it, use our PL graph on this. And, oh, hold on. Let me just make sure my lock is unlocked there. Okay. And current price is right here. So you can see we're bullish on this. Now, if this is too bullish for you, okay, because our break even is right about where the stock is, we want it to go up. Well, that's what we said. We don't want it to go down, no doubt. But I could always just change the strikes, right? If I want to make this kind of, instead of just outright bullish, which this is pretty much outright bullish, if I want to make this more kind of neutral to bullish, well, we could do that. We could do that. I could just change the strikes. If I move these strikes down from 745 to 735, did you see how they just shifted? We can do that. And that works. I want to do it that way. Now, if I want to see, well, what's my probability on this trade? Make sure this is today's date. Put this on the day after your initial expiration. My initial expiration is February 20th. So I'm going to go to February 21st. I'm going to go right here, set slices, break even. And so slightly higher probability than not, 53%, just a little bit there. Okay. There we go. So that's the trade. Here we go. It's a positive Vega trade. It's positive theta. Hold on. Yeah. Yeah, I just have the one. Do I just have the one strike price? Let me get to that one strike price. There we go. Why are you doing that? Hold on. Let me make this that. There we go. Okay. Positive Vega trade, positive theta trade. Sometimes we do positive Vega trades. Sometimes we do negative Vega trades. Sometimes we do positive theta. Sometimes we do negative theta. In general, though, for the most part, I'd say in this webcast, we try and stick with positive theta trades. We like time decay working in our favor there. Okay. By the way, there's a survey link in the chat, everybody. So I would love your feedback there. Okay. Feel free to give us some feedback there. Okay, let me go back and let's see, we changed this from the original. We went from 745 to 735. Trade 735. And there we go. That's the trade right there. Confirm and send. And so make sure you read it. And there we go. Okay. So we've just added another trade in there. Now, I don't have time to get into the third way I was going to show you, but the other way I was going to show you that I will tackle in a future webcast is to use the spread hacker. Okay. But there's something in common with those first two ways that I showed you. We both started with the technical analysis. We both started with the underlying stock. We found Meta, and then we looked for options that fit the bill for the Meta trade, for the Meta chart that we wanted. We did the same thing with Apple. We looked at the chart, we decided our technical analysis on it, and then we decided on the option. That is the standard way we're going to do things in this webcast. There is another way that I'll show you in a future time, and that is to use the Spread Hacker. If you're using Spread Hacker, though, the first thing that's going to come up is the actual option trade. So we'll hit that up in the future. But in general, use your technical analysis, find the direction, and make sure your option trade fits your forecast, ensuring that your trade is liquid. All right, everybody? Thank you very much. Again, there's a survey link in the chat. We appreciate you filling out that survey. Make sure you subscribe to the Trader Talks channel. It's very easy. If you're watching on YouTube, look in the bottom right corner. You should be able to subscribe if you haven't subscribed already. If you've already subscribed, don't click on that again or else you'll unsubscribe. Why do you care? Why should you subscribe? Here's why. It doesn't cost anything. But if you go to YouTube, for example, and you want to find content that is of interest to you, the trading community, the subject of trading, of options, is of interest to you, or else you probably wouldn't be watching right now. This stuff is more likely to show up on your feed, including these specific webcasts here for this class, the specific playlist for this class. You may get, if you don't subscribe, you're less likely to see those. So appreciate it. Also follow James and myself on Twitter at BrentMooreCS, at James Boyd CS. Coming up next, we've got market and sector analysis. Thanks for joining me, everybody. Everybody have a wonderful rest of the day. Nice weekend ahead, and we'll see you all same time next week. Bye-bye, everybody.